we were discussing about the module 9, which is on valuation application, and I was saying that it's a myth. Most people think that globally businesses are run based on the tangible assets. There is no doubt about it, but more than the tangible assets, business across the globe are run on intangible assets. And the most interesting thing is that in many of the cases, the businesses are running on the strength of intangible assets, but those intangible assets are not reflecting on the balance sheets of those companies. Yet, those intangible assets at times need to be valued. So, what approach or what method to follow for doing the valuation of those intangible assets? That is what we're going to cover in module 9. In module 10, we will be doing valuation or in certain specific situations. So, say for example, if there is an asset which is in distress, so how to do the evaluation of a distressed asset, or how to do the evaluation of startup entities, or how to do the evaluation of small and medium enterprise? Are these different in any way from the valuation of any other asset? And that is what we would understand. How to do the evaluation of cyclical firm, how to do the evaluation of investment entities, or how to do the evaluation for insurance coverage. And that is what we would discuss in module 10. In module 10, our module 11, our focus is going to be on the Indian accounting standards. So we would be focusing on Ind AS 113, which is on fair value measurement, Ind AS 36, which is on the value on impairment of assets. So how the impairment of assets has to be valued, that is what we would be covering. We would also look at Ind AS 103 in the context of business combinations. As I was saying a little while ago, that business combinations involve valuations to a very large extent. So, how Ind AS 103 is to be interpreted or understood or to be applied in the situations of business combinations. And then we would also look at in Ind AS 109, which is on financial instruments. In module 12, our focus is going to be on macroeconomics. Friends, is very simple, is absolutely very simple. Everything that can impact value of a business has to be learned and understood by a valuation professional. So, when we look at the valuation, we need to understand something which is known as GEIC analysis. Now, what is GEIC analysis? GEIC analysis, G stands for global, E stands for economy, I stands for industry, C stands for company. So, as valuation professional, we need to do GEIC analysis, and in this GEIC analysis, E is very important component. Economy is very important component. So we will understand macroeconomics. How does the macroeconomics impacts valuation of different companies or in different geographies? Then in module 13, we would be understanding professional and business ethics and standards. And this, friends, in my view, is very important part of valuation as a profession, because the government of India has brought out these valuation rules not because they are worried about chartered accountants, cost accountants, company secretaries, and MBAs. Not that the government of India would like to offer another stream of revenue for these professionals. No. The objective as to why the government of India has brought out these valuation rules is because in valuation there is a lot of scope of malpractices, and that is what was happening. And remember, the impact of those malpractices can really be extremely detrimental for the economy of a nation. Someone is doing over invoicing of imports, under invoicing of exports. So you are overvaluing the imports, undervaluing the exports, and you can imagine as to what kind of impact this will have on the revenue of the government of the country. So this is one example that I'm sharing it with you now. But there can be many such things as to how the valuations can be used for siphoning of the funds from one geography to the another geography. It is with an objective to put a curve onto such activities that the government of India has brought out these valuation rules. And therefore, professional ethics, business ethics, and standards are a very integral part of the valuation as a profession. They are integral part of any other profession as well, but more so in the context of valuation profession. And that is why there is a separate chapter on profession and business ethics and standards. And there are 8 different groups under which all these ethical practices have been listed out, which are to be pursued by a valuation professional when he starts working as a valuation professional. So that is what we will understand as part of module 13. And as part of module 14, we are going to cover, ultimately, in my experience, and I can share it with you, in my experience, our success in this exam, in passing this valuation exam, 75% will depend on how well we prepare ourselves for the exam, and 25% it will depend on how do we handle those 2 hours when we are sitting in front of the computer in the examination hall trying to answer those questions. And I can tell you that 25%, those 2 hours, how you handle yourself in those 2 hours will play a very important role in your success in passing this exam of valuation. And therefore, as part of module 14, we will also discuss the strategy, understand as to what kind of approach we should adopt when we are sitting in front of the computer, how to do the time management, how to do the answering management, what to answer first, what to answer next, what to answer, what not to answer. Now, all these questions we would cover as part of module 14, and I'm sure, friends, you will find discussion as part of module 14 extremely useful in passing this exam. And in the 15th module, we would be covering valuation provisions relating to the Income Tax Act, relating to the SEBI regulations, and also relating to RBI and FEMA. And I'm sure all of you will know in any case that there are requirements, there are situations under the Income Tax Act which require valuation. There are situations under the SEBI regulations that require valuation. There are situations under the RBI or under the RBI regulations under FEMA which require valuation. So we will also understand as to which are those situations and what kind of methodology is to be adopted in those situations for doing the valuation. So friends, this is the plan that we have for next 18 days including today's date. So this is what we will be following step by step. As I said little while ago, and I'm repeating it once again, objective of this whole session, this program, is to help you pass this exam and pass this exam with flying colors. And therefore, I will do my best in any case. You also do your best by participating 100% and also by raising your doubts and your questions from time to time without any hesitation. And I will always be very happy in answering your questions. So friends, this is the plan I thought I will discuss with you and share with you. In case if you have any doubt or any question about this, you can please ask me. Otherwise, we will move to the next topic, and that is overview of valuation.